Now in this example, I want to introduce you to a reversal pattern. Now a reversal pattern, or a pattern in general, is a reoccurring price pattern that happens in charting. Now what we want to do is we want to look for these patterns, and as they happen, they give us signals of what the market's going to do. Now we've been talking about markets that have trends, and this, as you can see, is a nice long trend, downtrend coming, and it's got higher highs and it's got higher lows, and as it comes down, it's a nice little downtrend. Now we're looking for a reversal of this downtrend. Now what would be a reversal of a downtrend? A downtrend, we know, has lower highs and lower lows. So a reversal would mean that we would have changed to an uptrend, that we'd then have higher highs and higher lows. So what we're seeing here, and you can see in this little example right there, that is a reversal pattern. What you're seeing is that the market is no longer making a lower low. It's now got a higher low. So that's the definition of a reversal, where a market changes from making lower lows to higher lows. We call this, we have a name for it, and we call it a 1, 2, 3 formation. This is probably one of the most popular and one of the most accurate reversal formations that we have. And we have a little tool here that's called the 1, 2, 3 tool, and this is a I call it a number one bottom point. Now the way you know that is a number one bottom point is that it is an annual low. Okay, for a 1, 2, 3 bottom, it would be an annual low. Now if we were looking at a 1, 2, 3 top formation, and we'll look at one of those in just a second, and you see the changes, we would have actually a number one high would be an annual high. But we're dealing with the number one low point at this point in this example. So I'm going to bring these back into place, and you can see we have a 1, 2, 3 bottom formation giving us an annual low, a retracement back up to what we call the number 2 point, which is, as you will find out, or as you've noticed in the last, is generally a 50% retracement of the last major move, or at least a 50% retracement. See that? Now it's coming down, and then the number 3 formation is also based on a 50% retracement of some kind. So it goes back up, makes the 2, comes back down, breaks the 50% level, but does not break the number 1 point. If it breaks the number 1 point, then of course it's a new annual low. It's a lower low, and it is not a reversal pattern. So that then becomes your new number 1 point, and you anticipate another reversal off of that point. But right now what we have is a 1, 2, 3 bottom formation. We're looking for a 50% retracement off of the last major move. So on this move, we would actually be looking for the market to retrace and come back to the 164.45 area. And now with this software, all we have to do is advance the market, and you can watch as this number 2.123 is broken. And of course a chartist would place an order to buy on a break above the number 2 point, because that is a confirmation that the market has retraced and is going the other direction. We're now making higher highs and higher lows. Of course, that's the definition of an uptrend: higher highs and higher lows. Okay, so as you watch this market move, it's going to get again move in little retracements, and there it's reached our goal of 164.45. So we've got a valid 1, 2, 3 bottom formation, a break above the number 2 point, we buy, and we expect the market to move up to the 164 level, which is our 50% retracement. So that is a 1, 2, 3 bottom point, one of the most popular retracements and most accurate retracement formations that you're going to want to watch for. Now let's look here at Oates, and in Oates you'll see I've played this chart out to the end, and here we've got another example where we have a 1, 2, 3 formation. Actually, that's over one tick. There we go. So there we have a 1, 2, 3 formation. This is an annual high. You'll see it's the highest point for the last year. It comes down, it creates a number 2 point. It retraces approximately 50% of the move back to our number 3 point. It does not create a new number 1, and then it turns and retraces back down, and on a break below the number 2 point, that would be, most chartists would place a sell order to sell below the break of the number 2 point, because we now are in a downtrend making lower highs and lower lows, and then we would sell back to approximately a move of the last major move. We'd want to see it move back. We can come back a little bit further on this one, where I'd say about to this point here. So we're going to look for this market to move back down to at least a 229.50 point. And it broke well past the 229.50 point on a 50% retracement back down to the last major move. So that's your 1, 2, 3 top formation. Again, chartist break or sell on a break below the number 2 point. Now you're going to want to watch, and I want you to go through, and I want you to look through 150 charts. And I want you to find those 1, 2, 3 top patterns and look at them, because they look real different on a lot of different charts. Some of them are very wild and they happen very quickly. Some of them are longer and drawn out. There's a little rule out there that people like to have, keep a thumb, some kind of a rule of thumb to try and keep you straight with your 1, 2, 3 patterns, because a lot of people want to know how long a 1, 2, 3 pattern should be formed. A general rule is what they call the 10, 20, 50 rule. And what that is if the number 1 pattern and the number 2 pattern should happen within 10 days. The third pattern should happen within 20 days and should be 50% of retracement of the 1 and the 2 point. So 1 to 2 should be 10 days, 2 to 3 should be within 10 days, and then that should be a 50% retracement of the 1 and 2 point. So that's your 10, 20, 50 rule. Now, other chartists like to see these 1, 2, 3 patterns as long as possible. Other chartists might see this right here as a 1, 2, 3 formation. So you got 1, 2, 3, and a break below the number 2 point at this point would be a sell to go short. Now, the way you're going to want to do it is you're going to want to form your own style, and you're going to want to decide what works best for you. I would look at this and say, my 50% retracement has already been met way before my 2 point, so I wouldn't consider that a valid 1, 2, 3 formation because it's too large. The number 2 has already retraced past my 50% retracement of my last historical major move. So I prefer to look at this a little bit shorter, as we've got in this example here, where we're seeing a 1, 2, 3 pattern with a reversal back down to 229.50. That's your 1, 2, 3 bottom and your 1, 2, 3 top formations. Practice, practice, practice. Go find some. Look in a whole bunch of charts and see how many you can find. Remember, they've got to be annual highs and annual lows.